about 2 hours before the open on Wednesday, March 30th. Hello, traders. It's been a few days since I've done a video. Let's get started with my previous pick. Facebook. Loved it. 1 hour after the open, I posted the video. This is about where I recorded. Stock pulled back by the time I got the video rendered, got it up on YouTube. Chances are you didn't participate in this part of the drop, but you can see that the stock had very, very nice support in here, and look at it go. Up $10 in 3 days, another winner. I'm going to start all my videos off with my previous pick. We're going to review it. Facebook still looks good. It's not my favorite because it's recovering out of a deep trough. It has room to run right up until that level right there, which is about 245 or so. If it can get through that, then it'll start to fill in some of this gap. But for right now, big drop in the stock. So we caught a little bit of this bounce. Fantastic. Still looks good. Still no need to panic. Still no need to get out. But you should be using a EMA 8 as your stop for the position. So let's take a look and see what we can find as far as new stocks today. I'm going to keep this part of the video very short, but then I'm going to get into some analysis very, very quickly. So what do we want? What is the ideal situation for us? I've been mentioning to you that it is when we have the SPY on buy signals across all time frames. M5, 15, 30, H1, H2, D1. When we have a strong market and all of those signals agree, then we want to find a stock that has similar. So we're going to be looking for stocks that have buy signals across all time frames. We click search. Whoa. This list got long in a hurry. And we're going to get into that in just a little bit. So let's add some additional filters. Stock above prior day high, liquid options, buy signals across. Let's go with a stock that is above the 20-day high. That would be good, right? We cast a wide net. We start drawing it in. Still a lot of candidates. How about above the 20, 50, 100, and 200-day moving average? Hey, that narrowed the list considerably, and now we know because of these variables that have been added that the stock has some decent strength. So we can take a quick look down the list. There are some beauties. Let's take a look at Costco. You can see Costco flirting with the all-time high right on it. ABBV has been on our list. Apple was the stock that I highlighted last week. Look at that baby run. That was a beautiful pick. Going to continue to go down the list. Amazon, that's going to be your pick of the day. Love this downward sloping trend line. Breach to the upside. Put up the major moving averages to see where they come into play. That's the 200-day, 100-day, and 50-day. Hey, we are above all of those major moving averages. I like Amazon to continue to float higher. Notice that the stock is very choppy. You can see that in the price action in here, but I like what I see recently. So one thing that you could do is you could sell an out of the money bullish put spread, keying off of the 100-day moving average using 32.40 as your short put strike price. So maybe a 32.40, 32.35. Do that for a $1 credit. You're close enough to the money, you should be able to get that. And the notion here is that even if the 200-day fails, the 100-day will be preserved. But I like Amazon to continue to float higher. So I'm going to pause, and then we'll continue this video. Okay, so for those of you who really want to learn something and who are not just looking for a pick, how the heck do I do this day in and day out? Well, first of all, I get the market right. In the last couple of months, we've been very, very cautious and we've only been looking for day trades. But recently, we've been able to swing trade because we have a strong market tailwind. I'd mentioned to you earlier, we're looking for agreement across all of the buy signals. And you can see M15, buy signal, M30, buy signal, H1, buy signal, H2, buy signal. When all of these are agreeing, then we know we have that strong market tailwind that we need. This is when we can ramp up. This is when we can size up. This is when we can ride our trades longer. constantly asked, Pete, how do I know when to get out of a trade? I always seem to cut my winners short. Well, first of all, you have to know what the heck the market is doing. Are you in a market that is conducive for upward momentum? Do you have that strong tailwind to fuel the stock? If you don't, and the market is all over the board, like it was back in here, you've got to cut your trades short. When you have some nice winning profits, you have to take them. When we have huge gaps up overnight, 60 points up, 60 points down, 60 points up, 60 points. Who can swing trade that? You can't swing trade that. You have to wait for conditions to settle down. And we have that right now. 10P, does it work on a longer term basis? You bet it does. This is a daily chart, so we're going to look at a longer term 10P bullish cross in here, and you can see bullish cross. That was a nice entry point in here, but the market's still very, very choppy. But here's where you get into a nice bearish cross, but you don't take the trade until the upward sloping trend line has been breached, and it came in about like that. So we can zoom out. And when I do that, you can see where the upward sloping trend line came into play right in here. So that sell signal was a little early, but that would be your shorting point. So yes, it does work on a longer term basis. We'll go back to the normal view. You can see how we had this dip right in here. We get a bullish cross, downward sloping trend line. You had a very short term long in here before the market rolled back over. Upward sloping trend line, breach to the downside. That's where you would be getting short, right in there on that cross. And now all of a sudden we've got this longer downward sloping trend line and a bullish cross way back here. Yes, this is a good signal. The market should continue to run, but throw caution to the wind. We've got a few things working that we need to be very cautious about right now. First of all, major moving averages coming into play, 200-day, 100-day. We'll put those up. Put the 50-day up. Hey, we have cleared all of them. That is fantastic. I'm also going to put up some of the volume here so that we can see what the volume's been like. Decreasing volume, okay, not a great sign. When we start getting into light volume rallies and you start seeing the market stall out on a light volume rally, then you know that you're due for a correction. Where does that correction take us down to? Maybe the 200-day moving average, that would be a scoop if we get there. Maybe the 100. The 100 is probably more likely given where the market is right now. So I would be watching for a little bit of a pullback, but here's what's going to happen first. The market's going to stall out. So you're not going to see long red candle. Chances are, if you saw an overnight gap down, support would be established and then grind, 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 grind. Buyers will come in once they know that support is there, and you'll actually finish with a green bar. That's what's been happening for many, many days. You'll notice this overlap in here. And what do these overlapping candles tell you? Market closes on its high, that bid is checked, and now we open inside of that candle. Okay, the coast is clear, everything looks good, bye, 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 bye. Go through the same process the next day. Market closes near its high. Let's make sure that that bid is still there. Yep, it is. Okay, bye, 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 bye. So you get overlap. When you get overlap like this, it tells you that you do not have to have a lot of swing exposure. Why? Because every single day, you're going to get that bid check. You're going to get that retracement. You'll have an opportunity to actually enter better than the prior day's close. So this is a good pattern for day trading. Once you start getting into these gaps like this, now all of a sudden the market's opening higher and it's continuing to move higher, then you have to be more aggressive and then you do want to swing. But in these instances, you have the tailwind, you have the information that you need to tell you that the market is going higher. Well, what information? What are you talking about, Pete? I don't see any information here. Got a downward sloping trend line that's been breached to the upside. You've got some green candles stacking. You've got a close above the 200-day moving average. Now you got a close above the 100-day moving average. Now you've even got a close above horizontal resistance. These are all good things. If we start going back, here's where we need to be careful. Look at how minuscule that volume is. So we're not anywhere near this level right in here. But what happens on these big troughs where the market sells off is you're going to get these nice candles in here. But then eventually it's going to stall out. You get these tiny, tiny, tiny little bodied candles as the market starts to move higher. That's when you should be trimming your size, waiting for that pullback. Get the pullback. Support is confirmed at a major moving average. In this case, I think it may be the 100-day moving average. Boom, higher. So be very, very careful if you start to see this. And perhaps one of the more dangerous patterns is if you have a big gap up and then you finish on the low of the day. That typically signals like this. You had a gap up right there. That was a new high. That open right there, that red candle was a new high. Market tries to push higher, finishes on its low of the day. That is a reversal. That is a bearish hammer. When you get these off of a relative high and you've had this type of tight price compression, you're going to get some follow through selling because now all of a sudden buyers have shown that they're not that aggressive. Sellers are going to check the bid. Now you'll have a better entry point to get into your long-term swing trades. I believe that's what we're going to see maybe in the next week or so. So it won't be a big pullback. It'll just be a little one. We have earnings season coming up in 2 or 3 weeks. I think that's going to be fairly bullish for the market. Conditions in the Ukraine are starting to improve. Nobody cares about inflation anymore, or at least they're kind of numb to that news, and they're numb a little bit to the Fed hiking rates. But here's the deal with the Fed. They just started hiking. A 25 basis point move is going to do absolutely nothing. Bond yields are still at historic lows. Now, if we get a 50-point rate hike in May and a 50-point rate hike in June, that's something. And that's what Fed officials are talking about. So I think we're going to get a nice little reprieve here for a couple, 3 weeks. And then towards the end of April, as earnings season starts to unfold, I think you're going to see the market stall out. That's when you have to be careful. We'll also be that much closer to those Fed rate hikes. But for right now, as long as the market's not pulling back very much, and as long as we're able to continue to advance, green candles stacked, you can stick with your long positions. We start to stall out, know that that 100-day moving average is likely to be tested. So let's go back and take a look at the 1OP indicator, and we'll use a H1 basis because I'd mentioned to you that yes, it does work on longer time frames. So you've got a big trough right in here, nice bullish cross. We can put up the buy and sell signals in here. That's a beautiful long signal, and we are through the downward sloping trend line. So that's a legitimate bullish cross. Market continues to go higher. We've got that longer term buy signal intact. Nice buy in there. Got a little bit of a short there. Let's go into the H2 time frame, see how that shapes up. So you've got a bearish cross right here, upward sloping trend line, breach to the downside, very nice sell signal in here. Deep trough, bullish cross in here. We don't do anything on that bullish cross because we do not have technical confirmation yet. If you came down and used a line like that, pretty steep. Yes, okay, that would be a decent entry point, but you can see you're stopped out on that right away. Now you've got a bearish cross, upward sloping trend line. You can get short in there, but you get taken out of these positions because the market's just kind of chopping around in here. Nice bullish cross. We don't take that until we have that downward sloping trend line breach to the upside. Now we're talking. Now we're talking, and this is actually a bullish divergence. Market up, 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 1OP down, beautiful bullish cross. We know that when we have a bullish divergence like this, the next bullish cross will be good. Comes into play here. Gorgeous stuff. Never look back. So yes, it does work on a longer term basis. I'll go into a 15-minute chart. I haven't reviewed these, but same type of thing. Here you've got a nice bullish run higher. You have an upward sloping trend line, breach to the downside. There's your short, but you're out of that very quickly for a small loss. Nice bullish cross in here. Get shaken out of that position. Another nice bullish cross in here. Now you've got to use a horizontal resistance line because you don't have much of a downward sloping trend line. You get long in here. Off you go. All of the signals agreeing. So let's go through. 5-minute on a buy signal way back here. 15-minute buy signal here. 30-minute buy signal here. 1 hour. Here, you can see we've been long for quite a while on that basis. So that's how you wait for those tumblers to line up. When all of the tumblers line up, the door unlocks. And then you look for similar. You look for stocks like this that also have buy signals across multiple time frames. And then you can start adding other variables so that you have less search results. Every checkbox that you mark increases your probability of success. So these are the stocks that you want to be focusing on. That's how it works. That's how all of this works. So it's just a series of tumblers that have to fit together, but the main tumbler, the thing that makes all of this work, is the market. And if all of a sudden you feel like things have clicked for you and you're starting to get this whole trading thing, you've probably already sharpened your skills. The difference is the market. Look at this beautiful, nice price consistency. You didn't have that back in here. And we did have some really nice shorts. A lot of people are finally learning how to short after a 12-year bull market. They didn't know how to short. Now they're realizing, I better be able to see the market from both sides. These are some of the best trading days I've seen for day trading S&P 500 futures. So it was great for that. We had to adjust what we were doing. But for swing traders and for people who only like to trade the long side, you just now we're starting to get into that environment here when we got through the 200-day moving average and you've had a really nice stretch. So again, if the light seems like it all of a sudden, the light just went on. What happened? I think I figured all this out. You probably had it all figured out in here. You were just trying to trade in a market that was very, very volatile, filled with uncertainty. And now you have nice orderly price action and you start looking through searches and you start looking at stocks and you go, oh my gosh, this one looks good. This one looks good. This one looks good. You have to make sure that you're preserving your capital and that you're identifying changing market conditions. And when the market conditions start to change, please go back. Watch my videos back in November and December. I was already telling you that conditions are changing, and I could see it in the price movement during the most bullish time of the year. November and December, typically super, super bullish time of the year. When you start seeing pullbacks like this, it's a warning sign. So you have to be able to pick up on these warning signs, just like you have to be able to identify when conditions are starting to improve, because this is when you can ramp up your size. This is when you can hang on to your trades longer and let them run. I hope this lesson has helped you. Please post your comments. Please tell your friends about my YouTube channel. Facebook, excellent pick. Amazon, I really like it. It's a little bit more of a choppy stock, selling out of the money. Bullish put spreads below the 100-day moving average, I think really works. And if we do get that little market dip in the meantime, you'll have some cushion on that particular trade. Thanks so much. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.